Now that we've been oriented to the state of regulation, we've heard from some key speakers, we're going to bring in our next panel to talk about the topic of the day, which is the path to liquidity. Our moderator is Nathan Latka, host of the podcast The Top, which interviews entrepreneurs on how they grow and run their businesses. He has 3.5 million listeners and is currently writing a book. Welcome, Nathan, and your panel.
Thank you for that introduction. So as we get settled here on stage, we've got Joe, right, with tZERO, Howard, Start Engine. We've got Josh with Harbor, and then Linda, Senior Counsel at Crowell Moring. I want to jump right into it, and I think people can learn more about what each of you do as you give answers and as we discuss. So Joe, you met with the SEC yesterday. What did you learn?
Thanks.
He's regretting the conversation we had backstage now, right now.
Yeah, it's pretty clear. The SEC is starting to realize that they need to do something. We've all seen in 2017, June, the DAO report was kind of the start of it. And looking at 2017 again, raising $3.9 billion in ICOs, they realize it's not going away. They'd like it regulated. They see that we're in the forefront. We're working with them. And they've been asking us, what are you guys doing? What do you see? What's the vision? And we were running through yesterday all of really paralleling what we do in the equity side. Remember, we do about 2.5% of the US exchange volumes on a daily basis. So we're already embedded into Wall Street, and we're really trying to parallel that universe so that the regulators understand and appreciate what we're doing with all the same compliance, KYC, and AML rules.
Very good. So Linda, backstage we were talking a bit, and you and Joe were sharing war stories back in the 1991 era, and you were talking about the first ATS concepts. We've got Josh, obviously, at Harbor with the R token idea. Joe, obviously, really building on the ATS idea. Do you think either one of those is going to get adoption quicker, and potentially why?
Yes, but I want to answer a different question.
Lawyer, right? Go for it, Linda.
So in addition to what Joe mentioned about what the SEC really cares about, I think you all have to understand that the SEC thinks that a broker-dealer has to act like a broker-dealer. So with tokens and their volatility, they're concerned with the broker-dealer's net capital. They're concerned with protection of customer assets and that 3% that has to be separately segregated. They're concerned with clearance and settlement. And there is a guy at the SEC named Mike Macchiaroli who stands there like Mount Everest, and you have to figure out how you're going to deal with him. He's older than I am, and I'm really old. Mike is like 78 or 79, and you just don't argue with Mike. So you have to figure out how to position yourselves to get around these questions. He's very concerned that broker-dealers have adequate capital to protect customers. We all understand that this can be a very different world, but I think you all have to keep that in mind as you progress through how you're going to register or work with a broker-dealer and establish secondary trading platforms, whether you want to go the ATS route or go all the way and have an exchange.
So Josh, congratulations on the recent round of funding. I think that was a couple days ago, right?
Yes.
Smart investors. You're kind of approaching this from a different perspective in terms of a white list of accredited investors. So explain to us what Harbor's working on and explain the R token to everybody.
Sure. So the R token is a standard, and it essentially allows you to enforce a variety of securities regulations and contractual restrictions on that token wherever it trades. So some folks are going with the walled garden approach where the creation, issuance of the token, and the trading of it all happens within their walled garden, their ATS or exchange. We're designed to be plug and play with the entire Ethereum ecosystem so that you can issue that coin and it can trade peer-to-peer. It can trade on any centralized or decentralized exchange. And every time it trades, this is oversimplifying it, but essentially Harbor acts as a trade oracle that says, yes, those are the right investors. They've passed KYC AML. They're accredited if that's necessary. So that's the who. It looks at the what, the trade itself. So some types of securities have minimum investor numbers or maximum investor numbers or concentration requirements for tax treatment in real estate, for example. And then we check the where. Is it trading on a compliant exchange? So similar to tZERO, we're very focused in being plug and play with the ecosystem because we see a lot of innovation happening.
Howard, shifting to you real quick on some terminology related things. So if I asked you to distinguish between cryptocurrencies, ICOs, and security tokens, how would you describe each of those things?
Okay, Nathan. So the ICO is really issuing tokens. It's an initial coin offering. Now, it turns out an ICO can also issue equity in a company. So in a way, it's like an IPO, but privately. So the way we look at it is that you have the issuance of equity or debt as a token. Why not? You can tokenize everything. Like Josh was saying, he's going to be tokenizing real estate, for example. So we see equity in a company being tokenized. We also see a second token, which is the one you're going to use on a blockchain, which is a security token if it's issued for money, or a utility token if it's actually one day going to be used just purely for commerce. And so we see the distinction here. Now, the difficulty is you can't play the game where you say, oh, this is a security token, and it's going to be a utility, and you still sell it on a trading platform. It's trading, exchanging, it's being speculated. That's not going to work. On the other hand, if finally your blockchain application is decentralized, it works, it has a token, and it's not a speculative product, no problem. So I think we have to get the industry to understand it. We have to get the regulators to be comfortable with it. But I think there's a way to move forward, especially when you want to trade it. Because when you trade it on any of the platforms, whether it's tZERO or with Josh and the other ones, it has to be done in compliance with the rules. And the broker-dealer rules, the alternative trading marketplaces, which are the ADSs, all those rules, they exist and they work.
So Start Engine is attracting big players. Joe, why'd you switch to Start Engine?
Well, it was very complicated. Again, we were one of the early security tokens. Blockchain Capital did one in 2017. We took a little bit of a different approach. Being an existing broker-dealer, we attracted much more institutional interest. In fact, when we issued, and 2017 was still early days, by the time we did it in late 2017, it was December of 2017, we had about 56,000 people come online and register with our original offering. We were blown away. And doing a 506c.
These are unique individual. These are individual
Yes.
folks. Yeah.
Yes. Now, a lot of them were not accredited, but people came in not really understanding that they needed to be accredited. And with a 506c, which was a little bit different, you have to do enhanced accreditation, which means you can't accredit yourself as an investor. So from that standpoint, we were just overwhelmed with the amount of people coming in. People were having difficult time getting accredited, going through the KYC AML. Start Engine has been great. They've rectified a lot of those issues, a lot of the gaps, and it's been a great partner for us.
Linda, are we a Start Engine fan? She's going to answer a different question.
The bottom line is it is complicated. And I think that if I were going to give all of you advice, if you want to go down this road, get a good lawyer who knows what they're doing. Really, not because I am a broker-dealer lawyer.
Nobody believes that, by the way, right?
There are so many pitfalls and so many rules that you have to be aware of that would not occur to a normal person. They're just out there waiting to trip you up. Get good advice from people who've been down this road before.
Yep, very good. So Howard, back to you. As you kind of scale Start Engine in the platform, what kinds of companies are you seeing have the most success using the platform in terms of capital raise and then deploying that capital to create great utility?
Well, it turns out that it's always the same story. We've raised capital for over 150 companies, and we're looking to do about 300 to 500 this year, hopefully.
And how much total raised across the 150?
I can't disclose it because some of them are still in the middle, but it's pretty large.
North of what?
Well, you know, tZERO has already raised over 100 million, not necessarily all on our platform, but it's a lot of money being raised. I can't say that number right now, but what I can say is that the hustler, those CEOs who really are going out of their way to raise capital, they talk to investors, they go to summits like ours, they pitch. You'll see a lot of them pitching today. There's the ones who work tirelessly day after day. They are the ones who will be successful. Like tZERO was successful because they went out and went large in talking. Joe and his CEO, Patrick, they're everywhere. And I think you will see that the people who do best on Start Engine, those ICOs, are going to be the ones who have that reach out there.
Yep. By the way, I'll switch to Josh here in a second, but Joe, real quick to you. You know, when you make the announcement that Overstock is going to put out this ATS, this tZERO concept, the stock on the public market shoots up to $86. Now it's back down to 13 or 14. Why the hell aren't these people seeing how genius you are?
It's a good question. You know, unfortunately,
You only pay me $100 for that backstage.
Unfortunately for us, you know, people realized, and again, if you look at that increase, it was right after the DAO report, and people realized that tZERO, we have the only ATS right now that has actually done digital securities and has the ability to trade security tokens in the integration. So because of that, we saw quite an increase. And unfortunately, now it's pegged almost exclusively to Bitcoin, which we don't know why. We don't hold a lot of Bitcoin, but for some reason, that's kind of what we're trading with, and that's what we're seeing.
Got it. So Josh, back over to you. As you scale kind of our token and Harbor in general, I mean, you have to eventually create some kind of mousetrap that then you start to have some sort of network effects. I mean, how are you approaching that? How are you driving adoption?
Sure. So we're in talks with a number of folks who are interested in tokenizing traditional private security assets. So we don't play in the utility token space or treat your utility token as a security. We're focused on traditional security interests. So think private REITs, equity in private companies, LP interests, oil and gas trusts, things of that nature. So there's a lot of interest. The network effect really comes from two things, from the pools of investors, or three things: the pools of investors, the pools of security issuers, and then the places where they trade. And so one of the things we're focused on, like I mentioned before, is being plug and play compatible across the ecosystem. So there's a number of centralized and decentralized exchange concepts that are springing up. All of them have a little bit different take on it, a little bit different technology, different services that they provide. And we think that the market's going to slowly segment out over time, that the innovation will continue. And so our fundamental premise is that an open system, something like an ERC-20 standard that does plug and play with a bunch of different folks rather than a walled garden approach, is the way to go, because there's so many smart people launching so many innovative companies on the Ethereum blockchain.
So let's shift a little bit here. So Howard, this is a dangerous question, so I'm preparing you, okay? Why is John Oliver an EOS hater?
Well, I don't watch the show except for that one. Not because I don't like John Oliver. I think that the fact that John Oliver went mainstream with Bitcoin was amazing. It was amazing to see HBO dedicate a show to Bitcoin. My kids are still singing the songs, BitConnect songs. They love them. There's the memes out there, but it just shows you that the popular culture is interested now in what we're all doing, which is pretty extraordinary. Now, the EOS story is an interesting one because they have one of the largest ICO, if not the largest ICO today.
Are they the largest? I mean,
possibly $1.5 billion.
Yeah.
I've heard that they raise about $20 million a day, not from US citizens, according to their website. It's extraordinary. It shows you there's a huge appetite for investment. Now, unfortunately for me, I look at the world from a regulated world. So this is a utility token, ICO. Every country
you said it is a utility token ICO?
It is a utility token ICO. And every country in the world has an SEC. People are so naive to think just the US has the SEC. That is not the case. And I grew up in France, so they have the COB over there. They're not chopped liver. Mm-hmm. Those guys enforce the law as well. So we're lucky because we have rules that were changed recently with the Jobs Act in 2012. A lot of other countries are catching up. So when you have an ICO at that level worldwide that says we're a utility token, it's a problem with every single jurisdiction. It's not just, don't onboard US investors because US is bad. Okay, I get that. We're the bully. We're not the bully. Every country is a bully. They all have protection of investors. So I think the industry needs to understand that it's not just a US issue. It's a worldwide issue. We're here all together to figure out how to do it.
Linda, do you agree?
I do agree. I came back from Japan just yesterday and had spent the week talking about ICOs in Japan. So Japan is supposed to be pretty laissez-faire about ICOs, and yet what we heard was that they're really thinking through how they're going to regulate the ICOs, starting with AML and KYC. But, yes, they said, we think that they are securities. So even the most liberal of jurisdictions is, Howard, you're completely right. It's moving in the direction that the SEC has taken.
In fact, the SEC even yesterday, when I was there, was asking about international exchanges. Just to Howard's point, a lot of these ICOs are figuring, let's stay out of the US and just go non-US. And the SEC, what we're building is utilizing the fixed protocol to take that into security tokens. They really appreciate that now this could be centralized from a centralized location, integrated compliance, almost like a CAT system for the Wall Street people. It's a consolidated audit trail. So they're really appreciating that they could be global consolidation of all the compliance.
So,
Right. I want to make a point, Nathan. Excuse me. I agree with you. This fixed protocol is going to allow us to have a web of ATSs and broker dealers for best execution. So a buyer here, a seller there can meet. And that's not what exists today in the utility token so-called exchanges. That doesn't exist. They all have their silos. We are all going to work together because we're all regulated. And we know how to work together because we can exchange commissions. It's all written out. We're not inventing anything here. But imagine with the fixed protocol, that web of dozens of ATSs in the United States, we're going to create a marketplace that is so powerful that it's going to rival even the NASDAQ.
yes or no, do you agree with Howard? See, that's where your film crews, they record you saying that, and they record all the clapping, and that's the reel for next year, right? So tee that up for you. Linda, you want to add something?
Query, will there be a central limit order book kind of concept where all of the ATSs or broker-dealers or intermediators of tokens have to seek out best execution? And how will all of these very disparate exchanges and alternative trading systems communicate with each other so that an investor will be able to achieve best execution?
Yeah, so I think actually, but that goes to what's the structure of what we're building, right? So blockchain, the whole idea is it's a distributed computing system, that no one person owns it and that those protocols are open, and that's sort of the basis of the development of the ecosystem. So there are folks like tZERO, which has developed a trading protocol, and then folks are developing centralized and decentralized exchanges on top of it. We have the ERC20 standard that folks are taking. It's very important that we have those open standards so folks can plug and play, so that you can have, in essence, a decentralized single order book across the entire blockchain.
But it's going to have to be regulated.
Of course it's regulated. Yeah, and
Right now, tZERO is not looking at regulation, and I think they will
I
probably.
think, no, that's incorrect. They're very
They're
aware
looking
of
at
it.
regulation?
They're very aware of it.
But it implies a very different kind of regulation because we're really talking about global agreement on a system of regulation. And, you know, it's hard enough to get the 50 states to agree on anything.
I'm going to give the world
But these issues aren't new. Remember when the internet first came up and we thought, well, how can you regulate it? It doesn't exist anywhere. And then we regulated people where they live because people live in real space, not in internet space. And similarly for the blockchain, it's already starting to fall out. You regulate the people where they are. So folks that control protocols, folks that control decentralized apps, they get regulated where they are. And then you get extraterritorial jurisdiction, you get long-arm jurisdictions from those people who are affected or exercising jurisdiction who are affected by it. So it does feel different, but we have gone through this before. And I think to Howard's point, we do have a lot of regulatory certainty. When that token represents a security, the rules are actually quite clear. Just imagine that token was a piece of paper. You know exactly the rules that apply. When instead of a piece of paper, you have a token, 99% of it's very clear in terms of what you can do with it and how you can do with it, holding periods, who can buy it. And just like email was to snail mail, right? The content, the communication is the same, but email transformed communications because it was orders of magnitude faster, cheaper, and easier. And so once you tokenize securities, you can trade as easy as sending an email. And so it's orders of magnitude faster, cheaper, and easier. It's near instantaneous settlement. You can eliminate counterparty risk in certain contexts. That's what's transformative. But to Howard's point, the rules are clear and the regulations are clear.
If
Linda?
you think of a token as a stand-in for a stock certificate, you'll be there in your thinking.
Yep, exactly.
So Josh, what distinguishes when and when not to tokenize security interests?
So I think eventually everything will become tokenized because you have the advantage of the blockchain where you don't have disparate sets of books. And you have problems like Dole Foods had a problem where they thought they had, these numbers are wrong, but directionally correct, 34 million stockholders, and stockholders thought they had 46 million shares. But short term, I think the best place to tokenize is where you want to lock up capital, but not the investor. So for example, for private companies, you would want to tokenize where you're capital constrained, where you really want to enable liquidity for your investors. Where you really want to control who comes on and off your cap table, you're not going to lift those transfer restrictions on the shares. So tokenization doesn't give you that much extra help. I think real estate's a great example of where you want to tokenize because real estate's a long-term investment thesis. You have to lock up that capital for a long period of time. But those investors need liquidity. People get changes in business circumstance and personal circumstance. They need liquidity. And today it's very cumbersome because of the transfer restrictions and because of the lack of buyer and seller finding each other. So where you want to lock up capital but not the investor, LP interests, shareholdings, that's the best place to tokenize that security interest.
And there are, I know because we happen to represent one, there are...
Linda, hold on one second real quick. Guys, we're going to move to Q&A in a second, so get your questions ready and then go ahead and finish.
There are companies that are doing precisely that. Basically, maybe using tokens or not using tokens, but looking at small investors and giving them liquidity so that they don't have to hold real assets.
All right, Q&A. So how are we doing this? Is there a mic? Okay, go ahead.
So, Michael,
I'll repeat the question.
yeah, my name is Jack. I came from Dallas. I want to ask a question. With the 506C, we are only targeting accredited investors, right? Accredited percentage is very limited. So how about not accredited investors? Because if you don't have opportunities in the US, they will invest elsewhere. That's question number one.
Howard, repeat the question, then answer.
Okay, so the gentleman is asking, so if you're going to raise money using a Reg D, 506C, which is accredited investors, these are investors that are earning over $200,000 a year plus $1 million out of their home, and there's different rules for that. These are wealthy people, 5% of the country. You're not touching everybody. So how do you raise money from the general public? Oh, well,
that was the question.
well, it's unrelated. Unfortunately, it's unrelated for this panel. There are plenty of other panels that will talk about it, but briefly, you use the Jobs Act, Regulation A+, Regulation Crowdfunding, Regulation, those are the two ones you can use. That's everybody.
Real quick, one more question is, can you define a utility token? When can we launch a utility token? What is the criteria? In 3 words.
Okay, so Linda's out.
Look, I write a lot about this on my blog. So I've been thinking a lot about utility tokens. And frankly, they do exist. But you have to have the system. The blockchain has to be live, working. And please don't list that token on an exchange. Absolutely not. It's like you want to go to Starbucks and buy a $5 card, prepaid card to buy coffee. Think of that. That is truly a utility token.
Okay, next question. Okay, we've got one right here, white shirt. Go ahead, yell. Okay, we'll do the mic. We'll do the mic back here. Yep. Guys, if you have a question, just keep your hand up because the mics will work your way to this. So back here in the back.
And I have the mic. I'd like your reaction to this statement. We want regulation in smart contracts.
Ask it differently.
How can we regulate through smart contracts and disrupt the legal industry as well?
I love this.
I get the easy job. You guys have to answer.
Well, it's again unrelated to the path to liquidity. I hope we're going to get questions about trading tokens because I know a lot of people
so let's kill it then. So only ask path to liquidity questions. White shirt right here with the mic. Yeah, go ahead.
So this is a relevant question. A restaurant sells me a voucher for dinner for 2 because I think you're a great guy and I give you the voucher. Has the restaurant, and then you don't eat the food from that restaurant because they cook Irish food. So you sell it to the guy next to you for 80% of what its face value is. And so now it's been traded, it's been exchanged, and it's been issued. Has the restaurant issued a security? And therefore, do they have a requirement to register with the SEC?
Josh?
Sure. So if the restaurant is selling hundreds of meals at a time, to large institutional investors at huge discounts, and then advertising to the public that you should buy this meal because foie gras is going through the roof, then yes, it's a security. Look, fundamentally, if it walks like a security and it quacks like a security, it's a security. If you truly want a utility token not considered a security, don't market it like a security. Don't sell it in large lots to investors. Sell it in small retail lots to users. If you have a storage coin, because you got a distributed storage system, if you sell it in small lots to users, and the only large lots you sell are to a Dropbox or a box, and you don't hype the investment potential, and you don't have a lot of the sort of boiler room atmospherics that we see, you're far less likely to be considered a security. There are no guarantees, but I think what happens is we say it's a utility token as an industry, but then what are we really using it for? We're using it for investment and fundraising. And think of how people talk about it. They talk about their cap table when they're setting out token allocations. We're hyping it for its investment potential. We're selling it to investors, and we talk very little about utilities. So to your point, is if you're selling your utility token in small batches just for its use and then someone resells it, that's a lot different example than sort of the world in which, say, ICOs a year ago were in.
To put it really simply, if you are offering tokens so that you can raise money for your business, you're selling securities.
And also the SEC gave very clear guidance on this, referring people to the Howey test.
Yeah. All right, next question. Who's got it right here in the front? Yeah, Mike.
So I have the microphone. You partly answered the question already, but I want to go back to path to liquidity to honor what Howard was saying. So now I am a utility token, and I need some capital. So the advice is do a private raise, sell equity within your company, do all the other non-ICO related tools to get sufficient capital to then build my network and my company, so then I then issue my utility within the network privately. Is that your advice?
Absolutely. Listen, you can have two tokens. Your utility token is great, but there's another token called equity. Sell equity in your company as a token, get the investors that token, get the capital, build your business, issue a utility when it's ready. Hopefully you won't list that utility on those so-called exchanges, and you're all set because your first token, which is equity, is going to trade on all of the platforms, and your investors are going to have a benefit.
So here's another scenario. 5 or 6 exchanges are already trading the utility token which we created because it's an ERC token and the address is knowable. So we didn't ask them to trade it. They're now trading it. Am I a security?
Well,
they're selling it outside the restaurant. There's a couple of Irish people who are now they created.
Why do they have to be Irish?
Well, I understand. So if you look at what Josh is proposing, his ERC20 token has a lock on it. It's not going to work anymore. He's not going to be able to trade on those so-called exchanges. It won't work, period. He won't allow it. I talked to him yesterday. He won't allow it on these so-called exchanges.
So it's now
only on an ATS.
So it's now my obligation to create a token that has this added complexity that it can't be traded somewhere else. That's my obligation.
You just sign with him and you get the token. You don't have to build anything.
I understand their business is available. So second piece of this, a different strategy for utility token. I have 150,000 users in my platform. This is a true story. And I asked them to stake their participation in our collective economy. So this is like they're participants in a co-op, and they are providing cash, maybe for a subscription of service, and in reward for that, I'm going to give them tokens. That's still a utility, yes? According to you? Now they start trading with each other. Wait a second. The gentleman before who said, hey, why don't we create our own marketplace and own market making? Because we're going to create a bulletin board where people who are now stakeholders in a cooperative venture holding a token as a ticket for cooperation exchange with each other. Is that a security?
Everything
I'll rest.
Everything you say exists in the game industry. You just have to play World of Warcraft, and you'll see all of that trading.
He still has Activision shares, full disclosure, right?
I do have shares in Activision.
Yeah. All right. So we're going to move on and get one last question, and I think right back here you've got a mic.
There's a mic right here as well.
Oh, up front, sorry.
Yeah.
Sorry. So you can throw stuff at me, go ahead.
Sorry. Howard, to your point earlier in regards to path to liquidity. So I'm in a personal conflict. I was founder of a startup. I'm a technologist by nature. question is, if we designate ourselves as a security token, are we at a competitive disadvantage? Because right now, the liquidity standards are still being built with tZERO and Josh, I guess, with Harbor. What are the terms and conditions? What is the compliant framework? Do we have to wait a year prior to that security token being traded? Because the whole point of ICO, why they're so disruptive, is because they, like you said, Josh, that they lock the capital but not the investor, that they kind of democratize VC. There is a liquidity factor in terms of your project. So anything in relation to subsequent exchange of that security token?
I'd like Joe to tell you how wonderful tZERO is going to go live and allow that, right?
Yeah, and there's, again, we're confined by the regulations. I mean, if you want to do an ICO, you're outside of SEC rules, and they're going to consider it a violation of federal securities laws. To be in compliance, you could file an S1 and do a standard IPO, or you could do Reg A, which is a shorter period. But Reg D has been the typical standard for security tokens up to this point, and that does require accredited investors and a 1-year hold period. Now, after that 1 year, you're allowed to bring in non-accredited investors. It essentially becomes a real registered security, and anybody can trade it. But there is that hold period that's required to make sure that accredited people are investing.
But you're saying that there is a path to liquidity for this gentleman who's going to issue a security token. Is there a path to liquidity?
There is. It's after the 1-year hold, or alternatively, there's a Reg S option as well, which will allow non-US participants to trade it within 90 days or 90 days after it's issued.
If it's debt.
Yeah. It could be an equity as well.
I don't think you
Last
should
thoughts, Linda. Yeah.
discount Reg A. Reg A is a really valuable tool. You could raise up to $20 million from non-accredited investors. The stock is freely tradable. It's thought of as a mini IPO. It's much easier to get through the SEC, and it's something you should definitely consider.
Ending with the lawyer is always a great option. Are they good guys or what? Thank you so much, Joe, Howard, Josh, Linda. Thank you.